Hello, and welcome to the second CD of the Old American Final Expense Training Program. On the first CD, you covered the application and the health questions. On this CD, we are going to talk about the policies and riders available to you at Old American. We are going to start with the Peace of Mind series of policies, consisting of the BMS, the BMQ, the Peace of Mind Guaranteed, the Peace of Mind for Tomorrow, and the BMP. All of these policies have a specific place in our market. So as you learn each one of the policies and how they work, think to yourself who you would most likely sell this policy to. Each one of the policies is broken up into an explanation of what the policy is, how we can market it, the benefits of that policy, as well as the limitations and the underwriting criteria in order to write that policy. If at any time you feel like you have additional questions on these policies, make sure you either consult your agent handbook or your general agent manager to have them help you understand and answer any questions that you might have concerning them. Or you can feel free to contact me, Cody Shirley, at cshirley at. The first policy that we're going to talk about under the Peace of Mind plan is what's called the BMS plan. That's also called the Budget Master Standard Plan. The BMS policy is the one that you are going to be writing 90% of the time while with Old American. The BMS plan is a whole life insurance policy that is paid up at age 100. It builds cash value and it provides full coverage as of day one. So basically what that means is even if they were to die the day after they purchased this policy, it would pay the full face amount even though they've only put one premium into that policy. That one feature alone is the main selling point for the BMS plan. The fact that it provides 100% coverage as of day one puts us at an excellent place in the market. Now, most policies that people are looking at for the final expenses through such companies as AARP, Colonial Penn, Lincoln Heritage, etc., those policies, the majority of the time, are going to have a 2-year waiting period, where if that individual were to pass away, the only thing that their company would pay is what they put into the policy plus a very small percentage. With this BMS plan, they have the full benefits as of day one. This plan is excellent for somebody who has fairly good health but not excellent health, and that's another reason why it's a great tool to use, is because the majority of the people who can qualify for this policy and get the full coverage would not be able to qualify for other types of coverage. The limitations on this policy are as follows. The first one is their age. The proposed insured needs to be between the ages of 0 and 85, and the target for this policy is going to be between the ages of 50 and 85. The second limitation is the health. The proposed insured needs to be able to answer no to questions 1 through 9. Now, there is a question 10 which asks if they smoke or chew tobacco, and there are smoking rates with the BMS policy. Make sure you ask that question so that you're quoting them the correct price or the correct monthly premium. The third qualification goes along with the health is the height and weight of the individual. They need to be able to comply with the weight chart A. The fourth limitation is that the individual can get coverage in the amounts of $1,000 up to $25,000 during the first year, then up to $35,000 after the first year. For the sake of us starting out with Old American, try to keep the policies between $1,000 and $25,000. It's very rare that you will write a policy above that face amount, especially with the BMS policy. Make sure that if you have somebody who wants more coverage than that, you can write them possibly a different policy that might be a little bit more appropriate for them, or you need to check with the underwriting at Old American to make sure that we don't make a mistake on that. So if you have somebody who wants to get more than $25,000, contact the home office and ask them about the limitations on that. The BMS policy by itself is an excellent policy, but as we are going to cover here in a little bit, there are several riders that you can attach to that policy. And with the BMS policy, we can attach all of them. So the accidental death rider, the children's term rider, the accelerated death benefit, the nursing home waiver of premium rider, and the BMIR rider are all available to attach to the BMS policy. If you have any more questions concerning the BMS plan, please consult your general agent manager or the home office at Old American. The next policy that we're going to be talking about is what's called the BMQ, or otherwise known as the Budget Master Qualified Plan. This plan is an excellent policy for somebody who does not have very good health. So it's for somebody who, for example, is undergoing, we'll say, kidney failure. They have kidney dialysis 2 times a week. This is a perfect plan for somebody like that who has almost terrible health. We'll call it that. With the BMQ, you need to make sure that the state that you are selling in permits the BMQ as one of their plans. And you need to make sure that if they allow the BMQ in your state, which one of the BMQ do they allow? Because there are 2 types of BMQ plans. There's a return of premium and there is a 30/70. So check with your general agent manager or with the home office at Old American to see which one your state permits, if they permit it at all. We're going to talk about first the return of premium BMQ. The return of premium is a modified whole life policy that is paid up at age 100. It accumulates a cash value, but as I mentioned earlier, it's modified for the first 2 years of that policy. With the return of premium, if the proposed insured passes away in the first 2 years, then Old American will pay as a death benefit what that individual put into that policy plus a small percentage. Now after the second year, or years 3 plus, obviously Old American is going to pay 100% of the death benefit, but they have that 2-year waiting period. With the 30/70 BMQ, if the individual passes away in the first year, Old American will pay as a death benefit 30% of the total face amount. So for example, if they had a $10,000 policy, Old American would pay 30% or $3,000, for example. If that insured were to pass away during the second policy year, Old American would pay as a death benefit 70% or $7,000 on a $10,000 policy. So that's what it means by modified whole life. It just means that during the first 2 years, if that person dies, it's going to pay a graded benefit or a limited benefit. If the individual were to pass away from accidental causes during the first 2 years of either of the 2 BMQs, then it would pay 100%. But if it's natural causes, you have the graded benefit for the first 2 years. The BMQ plan, as mentioned earlier, is excellent for somebody who has fair to poor health, people who wouldn't regularly qualify for any other type of insurance. With the BMQ, we have fewer limitations because our underwriting criteria is much more flexible. For example, the BMQ can be issued to individuals between the ages of 40 and age 80. You only have to answer no to health questions 1 through 5, and there are no smoking rates for the BMQ. So even if they smoke and have to answer yes to questions 6 through 9, then they can still get the BMQ, and it's going to be the same premium as it was if they didn't smoke and only answered 1 of the questions 6 through 10. As far as coverage is concerned, an individual can get anywhere from 1,000 coverage up to 15,000 coverage, and the weight chart that they need to comply with is weight chart number B. To help add value to the BMQ, you can add a couple of different riders. You can add the accidental death rider, the accelerated death benefit rider, as well as the budget master insured rider or the BMIR rider. That covers the BMQ. If you have any more questions, please ask your GAM or contact the Old American Home Office. The fourth policy that we're going to talk about now is called the Peace of Mind for Tomorrow. The Peace of Mind for Tomorrow is a whole life policy that is once again a 10-pay policy which builds cash value and pays 100% as of day one. This policy is basically the peace of mind guaranteed, but marketed for children or grandchildren ages 15 days to 15 years. The policy is available in two face amounts, and that is $5,000 and $10,000. If they want the $5,000 policy, it costs $10.75 a month. If they want the $10,000 policy, it costs $20 a month. So basically, what they do on this is they're paying $20 a month for 10 years. So let's do the math on that real quick. If we take $20 a month times 12 months, that equals $240 a year. If we multiply that times 10 years, that means that they would only pay in $2,400 for a $10,000 policy that would be paid up for the rest of their lives. In order to qualify for this, as I mentioned earlier, the proposed insured needs to be between the ages of 15 days and 15 years old, and they actually have their own application that needs to be filled out. You can access that application at kclick.net under Applications and Forms, or you can get them from your general agent manager. There's only 3 questions that need to be answered on there, and they all need to be answered no. And remember that there are no available riders to be added to this policy. The person who you really want to aim this policy at are for parents and grandparents who are concerned about paying for the final expenses of their young children. Oftentimes when I knock on a door and a prospect has sent in a card but they already have their insurance needs taken care of, I will frequently market this product to that individual. It's better than throwing the lead card away, and every once in a while you can make a sale out of it because it's a very good policy. If the prospect understands how it works and they feel any need whatsoever for a final expense program for their own children, then they would be foolish not to purchase this policy. If you have any more questions concerning the Peace of Mind for Tomorrow, please look in your agent handbook, or you can discuss it with your general agent manager. The third policy that we're going to talk about now is called the Peace of Mind Guaranteed. The Peace of Mind Guaranteed is a whole life policy that's paid up in 10 years. It builds a cash value and it pays full benefits as of day one. The reason that we call it the Peace of Mind Guaranteed is because they have 2 guarantees. The first is they will not make any more payments after 10 years. And the second is that they will never pay more into that policy than what they are going to get out. So for example, if they have a $10,000 policy, we guarantee that they are never going to pay more than their death benefit into that policy. The premiums on this policy are level and they are unisex, so it doesn't make any difference whether they're male or female, it'll be the same premium paid. It also doesn't matter if they smoke or if they don't smoke because there are no smoking rates on the Peace of Mind Guaranteed policy. The Peace of Mind Guaranteed is an excellent policy for individuals who are afraid of paying more into the policy than they're going to get out because they have great health. When working with this policy, it fits very well with individuals between the ages of 40 years and 60 years old, although we can write this policy all the way up to the age of 75. Let's look at this now just a little bit more specifically as what it means by they'll never pay more into that policy than they are getting out. Let's take an example of my father, Niall. Niall is 50 years old and he wants a $10,000 policy. If you look at your rate charts for the Peace of Mind Guaranteed, look under the 50-year-old, and for $10,000 coverage, Niall would be paying $54.70 a month. So all we have to do is take $54.70 multiply it by 12, and that will give us our annual premium, which equals $656.40. That is what he would pay in 1 year. So if you take that 1 year and multiply it by 10 years, that equals $6,564 and some change. But he has a $10,000 policy. Even though he only paid a little over $6,500 into that policy, he will have a paid up $10,000 policy for the rest of his life. Let's take a look at another example. Let's take a look at Anne. She is age 65, and she also wants a $10,000 policy. So Anne, we ask her the health questions. We know that she qualifies. And for a 65-year-old to get $10,000 coverage, she's going to be paying $109.10 a month for a $10,000 policy. So let's do the math. $109.10 times 12 equals $1,309.20. If we multiply that times 10 years, that will mean she pays in $13,092 over the 10-year period. But wait, you're saying, I thought you said she would never pay more than what she gets out. And yes, you are correct. Over the 10-year period, she would actually pay $13,092. But her death benefit is not just the $10,000. Remember, the guarantee is that they're never going to pay more than what they put into the policy. So in order to figure out what their death benefit is going to be, you need to turn to the section of your agent handbook that explains the Peace of Mind Guaranteed policy. On the second page, it talks about benefit per $1,000 of initial coverage. If you look at that chart and go to Anne, who is age 65, you can see that she gets $1,515 per $1,000 coverage that she had. So to figure out Anne's death benefit, we are going to take $1,515 and multiply it by 10 because she had $10,000 worth of coverage. When we do that, it means that Anne is going to have $15,150 as a death benefit. That's an excellent deal considering she put in a little over $13,000. Once again, completing with the guarantee that we are never going to put in more than what we get out of that policy. As you can see, in the final expense market, there are not many products that can compare to the Peace of Mind Guaranteed. This is an excellent product when you're working with an individual who is a little bit more free to spend their money how they would like. It is also great for those mathematicians out there who are always trying to figure out how the insurance company is going to make money on them. This is by far the best policy I've seen for this type of market. I urge you to master it and really learn how to use it well and how to present it well. Now, with this type of policy, of course, there are going to be several limitations. Not everybody can get this policy. So let's talk about the limitations. The first one is age. With the Peace of Mind Guaranteed, we can offer this on anyone between the ages of 0 and 75. If they want to qualify with their health, they need to answer no to health questions 1 through 17C, but remember that they're unisex rates and there are no smoking rates on the Peace of Mind Guaranteed. So even if they have to answer yes to the smoking question, it's still the same premium. The third limitation is that they can get coverage in quantities of $1,500 up to whatever amount that they would like. They could have a $2 million policy if they wanted to. However, the underwriting is going to be difficult. In order to avoid having to have somebody come to the house and draw blood and all the medical examinations, try to keep these policies between $1,000 and $25,000. In reality, when working with this type of a market, that's going to be where you're going to end up the majority of the time anyways. In order to qualify for the Peace of Mind Guaranteed, they need to fall within the weight chart of weight chart C. It is also important to remember that when writing the Peace of Mind Guaranteed, you can only have one person per application. So if you look at your general application that is approved for your state, you will see that you have a first insured's name and a second insured's name. With the Peace of Mind Guaranteed, you can only have one insured. Do not put two, otherwise underwriting will send it back and say you can't do that. The last thing we need to talk about concerning the Peace of Mind Guaranteed is that the riders that we can attach on this are very limited. In fact, we are only able to add the waiver of premium for nursing home rider. All other riders are unavailable on this policy. If you have any more questions concerning the Peace of Mind Guaranteed plan, make sure you consult either your general agent manager or your agent handbook. With the Budget Master Insured Rider, or the BMIR, Old American has provided a way that the spouse of an insured can get coverage when they would not normally qualify for a standard Old American policy. With the BMIR rider, what this allows an insured to do is if they are married to a husband or wife who, say for example, has had a heart attack, a stroke, or cancer in the last 12 months, they are still able to get coverage. This is about as close to a guaranteed issue policy as you're going to find. If an insured has a spouse that falls into that category, then they can get insurance in the amount of $1,000 to $5,000 to help pay on death or burial expenses. The amount of insurance that individual gets cannot exceed what the base policy insured has. So for example, if you have Gladys, who has a BMS with Old American, and she has $5,000 coverage, then her spouse, Tom, who has cancer, he can get the BMIR rider for anywhere from $1,000 to $5,000. But if she only has $2,000 coverage, he can only get up to $2,000. So the rider can only be equal to or less than what the base policy insured has. The BMIR rider has a graded benefit or a modified death benefit for the first 2 years of that rider. What that means is in the event that rider insured were to pass away, Old American would pay a percentage of or premiums paid plus a percentage as a death benefit to the beneficiary. Make sure when you are selling this rider that you check with your GAM or Old American underwriting to find out exactly what the payout is, because each state is different. Some states don't even allow this rider, so make sure that your state allows it. So for the first 2 years, it's a graded benefit. After the second year, it pays 100%. So in years 3 plus, it's going to pay 100% of the death benefit. In the event that insured rider was to pass away from accidental causes during any time during that first 2 years or 3 plus, then Old American would pay 100% of the death benefit. The only underwriting that Old American has with the BMIR rider is that the insured rider needs to be able to answer no to questions 1 and 5 only. If they have to answer yes to every other question on the application, that doesn't make any difference, as long as they can answer no to the AIDS question and the hospitalization and nursing home confinement question. The only other stipulation that Old American has with the BMIR rider is that they need to be between the ages of 50 and 80. If you have any more questions concerning the BMIR rider, make sure you consult either your agent handbook or your GAM. Accidental Death Benefit Rider. The first rider that we are going to talk about is called the Accidental Death Benefit. Basically, what this rider states is that in the event that the insured passes away from an accident, then Old American is actually going to pay double what the original policy was. So for example, if Gladys has an insurance policy for $10,000 and she has the accidental death benefit rider, if Gladys were to pass away because she got in a car crash and she passed away because of that car crash accident, then Old American would pay $20,000 instead of just the original $10,000. So when you're talking to prospective customers and you're discussing this accidental death benefit rider, it's really great because it creates a huge amount of perceived value. You can say to them, okay, Gladys, you have a $10,000 policy, but you also have $20,000 in the event that you pass away from an accident. And so that sounds like they have so much more coverage, which in reality they do. Now, in your agent manual, it talks about the time frame in which somebody needs to pass away from this death. Now, for the sake of simplicity, I don't know that I would get that in depth with this individual on these couple of different things, but just so that you know, in the event that that prospect has a question, you can answer these things. So, first of all, the limitations that this policy has is, first of all, the death must occur within 90 days from the injury, and the injury must be evidenced by visual contusion or wound, except in the case of drowning or internal injury. So basically, they have 90 days to pass away from that accident for it to be considered accidental death. All right? Now, the other thing about this policy is that it doesn't stay on the policy forever. All right? When you add this rider onto a policy, it stays on until that prospect hits their 70th birthday. Once they hit age 70, then the rider automatically comes off and their premiums are adjusted accordingly. Now you can write this policy on the BMP, the BMS, and the BMQ only. Those are the only three policies that you can write this on. And within those policies, they need to be between the ages of 0 and age 80. So if they're 81 or older, then they would not be able to add the accidental death rider. Now I know what you're saying. You're saying, Cody, you said that it falls off of their policy at age 70, and that is correct if you write the policy and have that rider on there before the age of 70. Now if somebody is 65 or older and you write them a policy and you put the accidental death benefit rider on there, it's good for 5 years. Okay? So for example, if you talk to John, he is 65 years old, you issue him a policy with the accidental death benefit rider, and he lives to be age 75, well, at age 70, that rider would come off of that policy. Now, if you were to write somebody age 75, for example, and they wanted that accidental death benefit rider, then that rider would be on that policy for 5 years or to the age of 80. Same thing if they're 80 years old, it goes for 5 years. So to sum that up then, just real quick, it's good till their 70th birthday, or if it's issued at the age of 65 or older, it's good for 5 years. If the prospect is going to pass away from an accident, then they need to do it within the first 90 days for it to be considered an accidental death. And if it is considered an accidental death, then the policy will pay double what the original face amount was. If you have any more questions concerning this rider, make sure you consult your agent handbook or talk to your GAM. The last policy that we're going to talk about on this introductory CD is called the BMP plan, or the Budget Master Preferred Plan. This plan is exactly like the BMS. The only difference is that the rates are better, or they're offered at a preferred rate, which means they're less expensive, and you can get more coverage. On the BMP plan, you can get anywhere from $15,000 coverage all the way up to unlimited amounts of coverage. However, 9 times out of 10, you're not going to write anything over $25,000. The reason we do this is because it allows you to get all the underwriting finished while in the home so that you don't have to have a paramed stop by and do the HOS and the blood profile and all that stuff. So try to keep this policy between $15,000 and $25,000, although you can go higher if you want to. This plan is perfect for an individual who has excellent health and is considering getting insurance for more than just the final expenses. Just like the BMS plan, it pays 100% death benefit as of day one, so even if they die the day after you write the policy, it pays 100% of the face amount. The limitations on this policy are as follows. The first one is their age. On the BMP plan, we can write individuals between the ages of 0 and age 80. With the BMP, there are tobacco rates, so you need to make sure that if the proposed insured answers yes to the tobacco question, you give them a tobacco rate. All of the health questions 1 through 17 need to be answered no, and the proposed insured needs to fall within the height and weight chart C. All of the riders that are available with Old American we can put on the BMP plan. That includes the accidental death benefit rider, children's term rider, accelerated death benefit rider, nursing home waiver of premium rider, and the BMIR rider. The last thing I want to mention on the BMP plan is that just like the Peace of Mind Guaranteed plan, it's a single applicant per policy. So if you look at your application, you've got 2 places for insureds, the first insured and the second insured. If you are doing a BMP, it's a single life only, so you can only put 1 person on that application. If you have any questions about the BMP policy, please look in your agent handbook, check with your GAM, or you can contact the Old American Home Office. The next policy that we are going to talk about is the CTR rider, and that stands for Children's Term Rider. If you are speaking with a prospective client who is under the age of 60, and that client has children who are under the age of 21, then this might be a really good rider to add onto that policy. Basically what this does is if the prospect who is under 60 has children, then we can add them onto that policy with a term plan. The nice thing about it is that we don't have to individually write each kid. We can do it as kind of a blanket policy or a family plan to where the parent, they have the whole life policy, for example, the BMS, the BMP, or the BMQ, and then on top of that, all of their kids have a term policy. What's nice about that is it gets them in kind of a family plan, and it makes it a lot more solidified so that they're getting a much better deal by doing it that way. It also gives you a step ahead of the competition because you're willing to cover the whole family. Now there's just a couple of rules on this rider. The first is, like I said earlier, the base policy or the base insured needs to be 60 years old or younger. They can't be any older than 60. And the children of that insured need to be 21 years old or younger. Now the children's term rider provides those children with that term coverage up to the age of 25. So it's term coverage for them up to age 25. Once they hit 25, then they can convert that policy into a whole life policy if they choose. With the children's term rider, they can get up to $10,000 worth of term coverage. Now, the amount of insurance that the children get cannot exceed what the base policy or the main insured has. So, for example, if you have a parent who wants $5,000 coverage, the max that kid would be able to get would be $5,000 or less. So the child could not get $10,000 if the parent only has $5,000. Now, if the parent has $10,000, then the child can also get $10,000, but that's the maximum that kid can get. So for example, if the parent has 20,000 coverage, the kid can only get up to 10,000. When you're writing this coverage on the children, each kid is going to have its own application. And the application you use is just the normal standard application for whichever state you're writing in. It's just the standard BMS application. So you will fill out one application for each kid and then mark in that application that it's for the CTR writer, or you can also write it in the special instructions box. That will tell the home office that that's not to be issued as a normal policy but as a rider on their parent. Also in that special instructions box, you need to write on there the parent that is to be attached to as well. If you have any more questions about the CTR rider or the children's term rider, please consult your manual or speak to your GAM. Moving on now to the waiver of premium nursing home rider. This rider is a favorite of the excellent salesman Brad Tomat. If you don't know who he is yet, you will soon know who he is. He's the owner of the Tomat Agency. But Brad Tomat, when he completed a training with the Wittenberg Group here about a year and a half ago, he talked a lot about this rider and how much he liked it. Now the abbreviation for the waiver of premium nursing home rider is WPNH. And this rider, what it states is that it will waive the payments of all premiums due upon the confinement of an insured to a nursing home after the elimination period has been exceeded. So basically what that means is in the event that an insured has to go to a nursing home, then Old American will pay the premiums on their insurance policy for as long as they are in confinement of that nursing home. In order for Old American to start making the premium payments on that policy, the insured has to be confined for a period of 90 days. So once the insured has been admitted to the nursing home and they have been there for 90 days, at that point Old American will start to pick up the premium payments on that. Now they will do that for as long as the insured is in that nursing home. Once the insured exits the nursing home, then they need to pick up those premium payments once again. It's important to note that the premiums will not be waived retroactively for the 90-day elimination period. The issue age of this rider is for anyone between the ages of 45 to 75, and it can be added onto the BMS plan, the BMP plan, and the Peace of Mind Guaranteed. So it cannot be added on the BMQ. Now make sure before you start writing that your state will recognize it, so you'll need to check with underwriting. You can give either Stacy Potter or Mike Kirshner a call and make sure that the state that you are writing that policy in allows it. As far as the Wittenberg Insurance and Investment Group, it's allowed in all the states. That's Utah, California, Idaho, and Nevada. So check with your own on that. As far as the marketing is concerned with this rider, it works particularly well with single females. For whatever reason, they really tend to like the waiver of premium nursing home rider. If you have any more questions concerning the waiver of premium nursing home rider, please consult your agent handbook or your GAM.